where we head from here on, and is 20,000 something that we should start discussing on the Nifty? Nitin Raheja, the Executive Director, Head Discretionary Equities at Julius Baer Wealth Advisors, joins us on the show. Nitin, hi, that's the first question. 20,000 on the cards?
I mean, if you look at a long-term history in terms of how markets have traded historically relative to nominal GDP growth and the P multiplier, I mean, we were looking at, if you took a 1 year forward view, that yes, 20,000 is where you should be, especially after the kind of consolidation that we had seen over the last 2 years. So now, markets will always surprise you by either doing this earlier or later. But I think pretty much if you look at our, the earnings multiple number, and and it's really not something very difficult. If you really think about it, we are talking of 1,050 EPS on the Nifty for FY25, and 1 year down the road, even if you sort of start discounting it at whatever 19.5 to 20 times, you are there pretty much there. So yeah, I would say that's pretty much where we should be, maybe in a year from now.
Okay, so that's a take coming in. But which part of the market do you think will continue to lead the rally? Is it going to be, let's say, financials? Is autos, which is looking good? And finally, are the large caps likely to make a comeback? HDFC Twins, Reliance?
So, if you're talking of the market going those levels, obviously the large cap have to participate, right? So, and when you look at it across the board, financials obviously is one very, very large component which will drive the market out there. And, we are at a stage where if you look at the financials, even at these levels, they are not tremendously stretched in terms of valuation. I think the valuations are pretty much attractive given the growth and the multiple at which they trade. So yes, we sort of like the large cap financials, and we think they could be one of the major movers that could drive it. Among other sectors that we think that could lead out there, there could be consumer durables, and we are seeing a sort of a K recovery in the economy where the lower or the smaller ticket consumption items are actually slowed down because of inflation. And as inflation wears off and we get into an election year and the kind of money that gets infused into the economy, you should see a rural recovery take place. So you will see a consumer based recovery also happen in the rural and the tier 2, tier 3 cities. So I think you will see, on top of that, the kind of spending that the government is doing on capex. So I think fortunately, except for exports, you've got all legs of the economy sort of firing at the present moment.
Looking at a couple of other buzzers, and clearly it's HDFC AMC all the way with an 11.5% uptick coming in. We just told you as to how SEBI has deferred the proposal to overhaul TERs, and that really is bringing about some amount of cheer in the entire AMC pack. HDFC AMC, of course, the top mover there. And the SEBI chairperson also indicating that the new consultation paper is going to be floated soon for the AMC segment. So Aditya Birla AMC, UTI AMC, Nippon Life, these are all the stocks which are in focus. Nitin, beyond banks, the larger financials, the not so traditional ones, AMCs, etc., is that a space to be looked at as well?
I mean, the entire AMC pack had got beaten down because of shifting regulations. All of it seemed to, sort of indicate a pressure point as far as the revenues are concerned. So in that sense, this is really a welcome change. Look, longer term, I mean, who can dispute the fact that the kind of savings that Indian investors have exhibited over the years, right, and which we saw the impact of those savings in the form of the strong SIP flows that flowed in almost all of last year, and which actually insulated us relatively from the kind of selling we saw from FPIs. So, as your per capita GDP goes up over the next 4-5 years and the savings level grow up, surely, financial intermediation is going to be a far bigger business than it is today. So within that perspective, whether it's the insurance business, whether it's the AMC business, whether it's, online, broking, I think all of these businesses will see a tremendous amount of growth. What we've seen in the last few years has been a compression in margins. I think that's where you're going to hit bottom, and then it's all going to be volume led over the next 4 or 5 years.